Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders with our How to Make Money Trading Stocks webinar for this week. You probably have all been very challenged by the market this week. It has been a very interesting market, to say the least, and it's been a challenge for us traders. I want to remind everybody that all the materials that we do present is for training purposes only, and traders should always paper trade any new method prior to the risk of their own personal capital. Mike can't join us this morning because he and his wife are on a quick trip, but he'll probably be back with us next Friday. So I hope those who join us on Wednesday night for the stochastics, not the stochastics, but the Fibonacci training webinar, I hope you enjoyed that and have been able to get in and take a look at the recording. There was a couple of people. If you have any problems with the recording, please let me know. And one person said that it was stopping and starting and had to restart it and all that kind of stuff. So if you do have an issue, please let me know. We may have to modify and go to another provider for the videos rather than Vimeo. We will see. This week's topic, I'm really excited about. This week's topic. What we're going to be doing is we're going to be looking at the moving averages and refining the entries on those, but also presenting some associated patterns with them. I think the pattern recognition is very important when we are trading, simply because there's certain patterns that are high probability patterns, and we're going to be introducing those and showing how those work and how those function. So your watch list could be the absolute best watch list in the world. However, if the timing is off, we get whipsawed out of trades, which is never that can be very frustrating. So that's one of the things that's going to happen. And then secondly, while I was back in Arkansas with my mom, a little bit of time difference from the West Coast, of course, and I was putting out a couple of pre-market observations. And I got some really good feedback on that, and so I am going to continue doing that from here in California, just to, especially when our futures are reacting violently as they did last couple of throughout this week because of the adventures that were going on in China. And then also some ask, can you go ahead and do the market updates even though you do a recording? And yeah, I'm going to provide a briefer market updates when we do have the recording. That way you don't have to, somebody doesn't have to watch the complete recording. So if that sounds good to you, please let me know. And then follow up emails on all orders. And also a little bit of reminders of where our stops are and that type of thing. Because when I put out the alerts, when we get in, included in the alert is where the stops are. However, I want to provide just a little bit of information on those stops as we move forward. That way, if you're unsure, that'll just be a nice little reminder. Hey, here's where our stops are. I can have my conditional order in, ready to go, both for profit targets, and the stop losses. And then one of the things we've been noticing, both Mike Traeger and I have been noticing that we get a huge upsurge towards the end of the day, the last hour of the day. And so throughout going forward, watch for more alerts and triggers towards the last hour of the day. That's where we're going to be looking for more of our potential trades. And so be watching. It doesn't mean the alerts aren't going to come out throughout the day, but with the program trading that is going on in the market these days, it's that last hour of the day, and to some extent, sometimes during the first hour, especially if we're selling option positions during the first hour, but specifically during that last hour of the day. I think by focusing there, it will also cut down on the level of whipsaw that we've been seeing in this market here recently. So how is the market doing? Well, we're moving into the last 2 weeks of August. Typically, the institutional traders do go on vacation the last couple of weeks in August through just after Labor Day. And so it gives us sometimes 3 weeks of light, but oftentimes very volatile trading. With the level of program trading that's going, that it does go on these days, that may, past precedents may be replaced with this program trading. And also, hey, everybody has their laptop with them when they go and travel. And so it may cut down on it somewhat. But typically the last couple of weeks in August and then moving into sometimes the whole month of September. Typically September is the worst month performance-wise, because oftentimes the indices and individual stocks are setting up for that October, November pre-Christmas run. So that's what we're looking at. So are we in the August doldrums running into September, basically going nowhere? So SPX, the upside momentum on the S&P has basically been absent for the last week or so. We've gotten a lot of volatile moves up and down, but it's shown a lot of indecisions. Like we'll get good news one day and or bad news that's interpreted as good news, and the market will rocket up, and then the next day we'll get news that comes out and the market will rocket back down. And we've seen that a couple of times. The first day that the Chinese started revaluing their currency, of course, we get that big down day on a day that calculation-wise should have been an up day, but it whipped back down to a level of support and then bounced from there. NASDAQ short-term downtrend is now in effect. The NASDAQ, when we look at the charts here shortly, you'll see that the NASDAQ does have better action, more defined and orderly action than the S&P. The Russell, lower lows, that should be lower lows and lower highs, but it's searching for support. And it did find a level of support earlier this week, but it put in a reversal candle, but then has stalled right there. So we're seeing underlying weakness and that continues to catch up. China was a really, was the outlier this week. We were looking for some kind of a catalyst to drive the market one way or the other, and it turned out that China trying to rectify, trying to fix their economy. Turns out that with the devaluation of the yuan, that has been a big impact on the global markets. And one of the things I also noticed is, and we'll take a look at this here shortly, is that the daily charts seem to be out of sync with the weekly charts. And when that happens, it's basically sometimes a time just to sit back and wait for things to come back into sync, and that's when some of our biggest moves come from. And let me do one thing before I go on. And for somebody reading this later, that way that it will be correct. There we go. So here's where we were last week in the percentage of stocks above their 20-day moving average, and we explained last week why this has become an important indicator. This is where we were last week. We're down here about 34, and the market did bounce a little bit from that. And here's where we are today. Here's last week. Here we are today. The overall tone is still the same. We have many stocks that are below There are, few stocks that are above their 20-day moving average, and you can step up to the higher, more significant moving averages like the 50, the 100, or the 200 in this particular at barchart.com, and you'll see a similar type pattern continuing. There's been a divergence where fewer and fewer stocks are participating in the rallies. Even though the market has went up, made new highs, it's been doing it with fewer stocks participating. Most traders always follow Apple to see what's Apple. They don't necessarily trade it, but recognize that Apple is, the big dog in several of the indices. And Apple is now in a downtrend. And so if it continues in this downtrend and doesn't get some kind of a bounce, one can reason that the indices will probably follow a similar pattern to Apple. It doesn't have to happen, but when the larger the stocks with the largest percentage of that make up a larger percentage of those weighted indices are not doing well, the indices tends not to do well. I would like to see on this particular chart, I would like to see us get back down in, below 30 and even back down into between 20 and 10. And then that could result in a very powerful reversal that would, could lead us to some really nice profits in the index ETFs. Let's take a look. There we go. We're going to go to the charts here shortly, but let's take a look at where we are. Last week, the Dow was down. The S&P was just about at break even. The Russell was just about at break even. And here's where we are today. As of 9 o'clock this morning, the Dow still down for the year. The S&P has jumped up to 1.3%, profitable for the year. NASDAQ bounced up a little bit from last week, and also Russell is basically just about break even for the year, and which is really kind of I won't say, well, it is kind of surprising, because typically this particular year in the presidential cycle tends to be a very positive year, but this year we're getting a lot of things mixed in that are making it where it has a lot of overhead. Part of overhead pressure, and part of that is due to this bull market has been going on for 6.5 to 7.5 years. Well, it's very long in the tooth. It's at a place where we would expect either a lateral move to consolidate all the gains, or even a pullback. And as we mentioned on Wednesday night, the S&P has been demonstrating for almost the whole year a very sloppy pattern with huge gains on a daily basis. Like as we see, this was a hammer-like pattern from Wednesday of this week, where it fell with the news on China, and then rebounded very nicely, got back up above the moving average. But we are seeing that the 100-day moving average, the 50, we're now operating below those areas. And so we could say that also that the S&P is also in a short-term down, at least a short-term downtrend. We've got a series of lower highs, and now with this low being taken out, we also now have, by this particular day, we also have a series of lower lows, which is the definition, of course, of a downtrend. On a daily chart, since we were only looking at approximately a month's worth of data here, I would consider that at least a short-term downtrend. Turning over here to the weeklies, the weekly charts, we see that the true strength indicator is looking very weak. The momentum is falling off. And I just had an alert go off, and I just wanted to see what that was. We are operating on the S&P, and I've highlighted this. One, I want to know when the S&P gets back up here to about the 2100 level, or when it drops down here to about the 2050 level. because right now we're basically sitting on a weekly chart in no man's land where it could go either way. And the market has been lending itself very nicely to resistance bounces and support bounces. And when it's in between that, it really is a coin flip on which way the price action is going to go. Earlier today, I laid in these two. I've got one alert here at this is my alerts, and it's up about 2097, 2100, and one down here at 2056-ish level. So that's where I wanted to be triggered to let, for the market to let me know what's going on. And so then I can take specific action around that point. The NASDAQ. Now before we switch over to NASDAQ, look how messy the S&P is over here. Well, when we switch over to the NASDAQ, what we see is, there we go, a little bit messy, but these particular patterns are a lot more well-defined, a lot more orderly. And so since they are more orderly, one may want to lean towards either trading the QQQs and the index ETFs or TQQQ as a leveraged index ETFs. Right now, we don't really have a trigger to say get in because we've got the 8-day moving average sloping down. We've got the 20-day moving average sloping down, and we're just at the 50. And the 50 is now flat to rolling over. And so any up move may be stopped either at this 45.50 level or up here at the downtrending, this downtrending line here. With regards to the indicators, yeah, we're looking, weak. The momentum's falling. On the weeklies, this isn't a positive divergence, but as you can see that, we still are showing some weakness here in the true strength, but it has not broken below this zero line, which would tell us it's in a really hard downtrend. Momentum has been falling off gradually over the last 4 weeks. And so let's take a look at the Russell. Okay, the Russell. On a daily chart, the Russell put in a nice hammer on Wednesday. Down here found a new level of support, which corresponds to these closes over here on a weekly basis, about the 11, there we go, about the 1188, 1190 level, and then has made a real good rebound off of that. It has not bounced back up above the 40-week moving average, which equates approximately to the 200-day moving average. And as you can see, we've had a lot of bearish crosses here where the 8-week is crossed below the 20-week. And we just about have that cross here, which the 8 approximates the 50, and of course the 20 approximates the 100-day moving average. Here's the 100-day moving average, this dotted line, and the 50 has just about crossed below that. If we do get a cross below that, because that had not happened since, back here in September of last year. And so it's kind of interesting how that happened in the first part of September, which corresponds to just about where we are right now. So we may be getting that happen a little bit earlier this year, but that tends to kind of follow a little cycle. And it is searching and trying to find, are we going to support here at this newfound low? Hammer stays in effect, so anywhere from the high of the hammer and then from the body down to the bottom of the tail, that is considered a level of support in between there. And if we do get a move up, it's still got to get through the 8, back up to the 200, and we'll see what happens when it gets back up into this area here around the 100 and the 50-day moving average. Right now, it is the weakest of the indices, but it too has been putting in very nice patterns. And so we may get a rebound back up to this downtrending line, which will probably be at about the 1220 level, and then we'll be able to make a determination on whether or not we want to put in a put or short the IWM on that particular when that does actually get a relief rally up in here. If it does a relief rally back up above these highs or back up above the 8-day moving average, start looking for weak candles. Those are the shooting stars. Those are spinning tops where it looks like the indices is tired. The falling off of the true strength on the weekly has continued to fall off, and it appears as, and if we go back several months, we'll see that typically between the minus 40 and the minus 50 on this particular indices is typically where they tend to turn back around. And here's the big down period from last year. It was down about negative 65 on the TSI, and then we get a nice positive divergence here before it hit the absolute low there in October. So study the October lows to see if what's going on in the market right now is looking similar. And so we have a slight acceleration. I'll be looking for more acceleration to the downside, and if we break through this 1190 level, we could go into a lateral move here between its low for the year, and it was the previous range that it was bouncing between at the very first 4 weeks of the year back in January. So, any questions on the market, guys? Okay. So that's where we left off there. For the week, I want to remind everybody that with the active trend trading, we're going to be putting out a little bit more information. Volume on the all indices are low. Gary, that's absolutely right. Even on the rebound, that was one of the things that we were noting, is that even on the rebound that happened earlier the week, it was not a high volume break bounce. And so one of the interesting things that I noted in some of the reading in IBD this past week is it was basically saying that even during that rebound, the internals of the market, which we've been highlighting for weeks here on the How to Make Money Trading Stocks webinar, the internals have deteriorating health, which is absolutely true. I mean, they are continuing to weaken. And finally, some of the leaders now are in fact falling. Now we want to keep our eye on the leaders because they're the ones will bring us back out of this. But as long as the leaders are in fact continuing to show weakness, when I say show weakness, sometimes it doesn't necessarily mean that they're falling hard, but just that they're it's just that their momentum to the upside and their velocity to the upside has slowed dramatically, and it's like they become sluggish. So here's where we sit. We've added a little bit to the profits for the year so far. We're up about 4% on the account. And then I'll remind everybody that the active trend trading system, and I think that you will appreciate some of the refinements that we're looking at going forward, and then also the strategies that we are focusing on. This wealth building and income generation, we're focused on that particular trade, especially with these whipsawy markets, because that's a good way to have trades, generate some income, and that's just a patience trade. But it keeps us sharp for waiting for when the stocks and the index ETFs turn back around. So here is that. This is the SPY trade that I have been doing now since the 20th of April. And the spreadsheet is getting so long that I just cut off the trades that have been done so far in August. And so we're halfway through the month. And our total for the year, or since April 20th, we've generated about $3,200. We originally bought into this position. It's the January 7, 2017 210 put. Bought that at $21. And now we have worked off that where the actual cost basis for that option is only $14.57 with a return of about 30%. And so on a cash flow basis, we're hanging right in here somewhere between, this is what it came out at the end of this week, so it's somewhere between $850 to $1,000 per month is what on average we've been doing. So picks for the week, we did no strategy 1 trades. We did close out a strategy 2 earlier in the week on cyber, but it was a trade that was started the week before. It was a pre-earnings run. Wealth and income generation on IWM, we gained $299 for the week, and we're looking for a setup for a position for next week. And then the early warning alerts, we had a trigger on the early warning alerts, but we were whipsawed out on a trade that we did on UPRO. Those who were a little bit aggressive and jumped on a UPRO trade or one of the other index ETF, leverage index ETFs, picked up somewhere between 2.8 to about 3.5% on that trade before it turned back over. So I just want to remind everybody that, and for those who will be watching these recordings, that if you're watching the recording, we do offer a 40% discount off of our regular rates, and you can find us at activetrendtrading.com. Monthly membership. Just go to this website for this for these reduced rates. And so I left this stock, and so hold on just a second, Dorothy. We'll take a look at that chart on the UPRO. I left this chart. This is a chart we presented last week, and this is that stocks greater than their 200-day moving average. That's the brown line, and it was showing that this was back in 2007, right before the market turned over, and then as we know, it fell through probably most of 2008, and then here's where we were approximately last week, where we're looking very similar. The internals are continuing to weaken, and they didn't make much improvement this week whatsoever. So to remind everybody, see you next week. Have a great weekend. I will be at Golden Gate University tomorrow for a technical analysis seminar, and look forward to that. And I don't know if any of you do anything through Golden Gate, but I'm looking forward to working with the folks there on some collaboration here going forward. But I'm going to a session tomorrow, all-day session, and it's about technical analysis. So with that, that concludes today. Keep growing the egg, and trade wisely, trade profitably. So let's look at some stocks. There we go. So Dorothy had a, let's see, I want to make sure that I'm not, does it mean the QQQ will fall more? That's a great question, Gary. You know, potentially it is in a downtrend now. So anything that we will look at right now on the initial up move on things like QQQ or the, let me get up a picture of QQQ. And I've got my daily chart on the left, my weekly chart on the right. And as you can see, we are now in a slight downtrend with QQQ. And so as long as that line is not busted to the upside, then we will remain in a downtrend. So there may be some upside back up to that resistance level. But if we get the 8-day and the 20-day reverse where it's popping back up and that line is broken to the upside, then we may be in for another rally, significant rally. If, however, this is simply just a relief rally, as we'll be able to determine if the volume does stay low, then it will be a suspect rally, and we would get a potential bounce up to here and then a rejection back down. And so what we've got right now is the prices are working in a nice little downtrending channel. And so if we bounce up here at the top of the channel, we would expect prices to fall all the way back down to the bottom of the channel. And then Dorothy asked a question on Cool Wonder. I sure will. Let's see, UPRO. So let's see, what day is that? Okay, back here is where we got our initial alert, Dorothy. So if someone would have been aggressive, and in that alert I said if you're aggressive you can go ahead and buy into UPRO right now. And so there was a move from here back up to resistance at 71, and that little bounce right there was equatable to just about 5.7%. Is that what the question you're asking? Okay, that's it. And then you got this little bounce, but again, since this failed up here, if you would have been out, after the 8-day moving average when it closed below that, and so it would have been a little bit less. That's why I said it was, somewhere between 2.5 up to 5.5%. So let's see. We've got IBB. I think that's the NASDAQ Biotech. Look where it's resting at. I mean, it's past support, and so is this going to basically do a nice consolidation, be very constructive, and bounce back up? We'll see. But I mean, we're at support, and again, this is one of those where you can draw these trend lines in here now, and clearly there's your lower high. This low is broken. You now have lower lows, and so and it's very interesting. I can duplicate this, and I'll bet you it is basically working inside a downtrending channel, and there you go. And when you have a stock that is doing that, where it's working inside a channel, anything that's kind of in here, unless you're getting a really good reversal signal, I call this, zone in the middle, no man's land. And it's best to wait until, see how it reacts off either the resistance of the upper channel line or the support of the lower channel line, which forces us to be, of course, patient. Let's see, we've got EROS, International. Yeah, Gino, okay, what have we got going with this? We had a nice little move here off the bottom on a weekly chart, and now we're significantly extended on a weekly chart. On a weekly chart, it looks like, okay, it's either consolidating to move higher or to move back down. And so you've got a really nice range here. You've got up here at approximately 37.5 up to, approximately 39. And then your lows are down here at the 33 level. This is looking a little bit suspect, like it may be running out of gas here. New high, not a new high on the TSI, neither a new high on, new high on the momentum, where the momentum actually dropped a little bit. You got good buying volume yesterday, but look what you got coming up here on the 18th before the market opens. You've got earnings. So what we may be seeing here is just a little bit of pre-earnings run. NXPI. NXPI, I was looking at that earlier in the week. It's looking kind of interesting, like it may be trying to do some consolidation. It has held on to the 200-day moving average. And so let's see if this, this basically, we can draw a couple of things here. We can, if you want to get, we can draw a trend line there across those lows. That's fine. And we're almost back down to those. Things of concern, the 50-day is just about ready, could potentially cross the 100-day moving average. And short term, of course, this isn't a downtrend from here to here, but we did break back up and try to rebound with earnings, but now we've dropped back down. So let's see if we get some consolidation, stay above the 200-day, and see if we get a rebound from there. But the market's got to also strengthen up before I think XPI would take off like that, because it might hammer back up against the 50, because the 50 and the 100 are actually acting as a level of a zone of resistance as we for right now. So let's see what transpires. Because ideally, if I just go off the TSI is a little bit early. It looks like it may want to fall back down a little bit, but it may set up a nice positive divergence for a potential pop-up. SWKS is, I think, in similar condition. It's hanging right there at the 200-day moving average. And if you recall, a couple of years ago in 2013, there was another stock that came down after being a leader on IBD 50, and that was 3D, DDD, and it came down, hit the 200-day moving average several times, bounced along it, and then rebounded and took off on a very nice up move. So it's really worth keeping an eye on what's going on with that, and to see if we get either one or two things. If we break down below that, because you've got now a bearish flag going across here, if we break down below that, then we're probably going lower. Where's it likely to go? Well, we've got a level of support here at 80, and also a level of support, nice level of breakout support here at 75. So start identifying those additional support levels, and or if you get all the way back up into, this little relief rally gets back up into, the 91, 92 level, you may look for a potential short at that point. Let's see. Okay, Coolwinder. Let's look at Amazon. Amazon has been hanging in there pretty tightly. As we've noticed, I want to show this a really good example that is worth noting. Look how Amazon has tended to go over the last half year. Okay, yeah, that's not right. Okay, a couple of things to notice on Amazon is, one, it's a stair stepper where it'll drive sideways for several weeks and then pop. Drive sideways for several weeks, then pop. Couple of things to notice in the observation is, one, on this last pop, well, it wasn't as powerful. We know that because the sellers came in almost at the get-go and sold it back off from its original gap up after earnings. So that's a sign of potential weakness. That could be the sign of an exhaustion in a specific move on Amazon. But it is, in fact, now going into that stair step, another stair step model where it's moving back here between in this range. And so if the market turns around, like let's take a, let's just use our imagination for a second. If we continue, it just works right there in that range till we get through October. Well, Amazon tends to do pretty well around the Christmas time frame. So from October, November, it may bust out and break out again. We shall see. But as far as this was a strong up move. This was a strong up move, and you can tell the differences. There wasn't a lot of selling off, but this one there was a significant amount of selling off. As a matter of fact, it looks like it's about almost $50 worth of sell-off after it gapped up with earnings. Okay. Here else we got Tracy LSI. Did you mean LSI? Because it looked like, if anything, LSI looks like it's somebody's bought it, and they bought it for about 11 bucks a share. Another company. But if you meant LCI, which I think is one of the ones that's been on our watch list, it is in the process. Okay, we've broken down from this, up, this uptrend. It's moving towards earnings here on the 25th of August, and looking very, very weak. Look at this little head and shoulders pattern. And typically on a head and shoulders pattern, you take from the shoulder line. Let me get that. So, okay, let's call this the neckline. And the neckline, which it has broken down and come back and retested. Take from the high here to the neckline, and then let's activate that and move it down to where it broke the, and that would give us from the head and shoulders pattern a projected down that down about 47, 48. So now that it has broken back down below this trend line and this little quick head and shoulders pattern, it may bounce back up here around the neckline or even up to this level. And we'll see what happens when it hits on earnings coming up in a couple of weeks. And Tracy, you also had Hawk. Hawk remains a stock on the IBD leaderboard, and as we can see, it came, this Black Hawk technology, it came down, tested against the 50-day moving average, and now, as appears to be like it's wanting to bounce higher. It needs to do some consolidation here. Let the 8-day moving average kind of slope change out a little bit. Because oftentimes what happens, it'll come up and bounce. We want some consolidation like we have here, because we want that 8-day, if you're triggering off the 8-day, you want the slope not to be so dramatically down, but you want it to be reversing to support a move back up here to the 46 level. And so, yeah, that's big drop to the 50. Good sign that it held the 50. But we'd like to see some buying volume come into this puppy, and that's just not happening yet. And then it's got as we saw, because we were in a trade from over here up to 46, and as we saw, it hit this 46 level and reversed off it. So we know that 46 is very strong resistance for Blackhawk. Let's see. Tesla. Okay, with a significant plunge below its 50-day and the 100-day moving average, it's challenged right now at the 100-day moving average. Tesla has now, on a daily basis, turned into a short-term downtrend, and it appears that now that it's finding resistance back at the 100-day moving average, it could be looking to move lower. On a weekly chart, it came down not quite to the, as we can see, not quite to the 200-day moving average, and is doing that rebound. Volume, the buying volume is still less than what's been going on with the selling volume. So until it turns, and does something constructive where it's, turning the 8-day moving average and it's everything sloping back up, I would be watching that. So it may chew around here because Tesla is a great trading stock because it has such large daily and weekly moves. Because like this week's move is $15 on a $240 stock, that's a nice weekly move. I will look at Baba. Let's see here. What else am I looking for? Okay, I'm going to get some from everybody. So we'll take a real quick look at Microsoft and Starbucks. Microsoft. Okay, Microsoft, what's it doing? It's basically on a longer term chart, you're looking at a little bit of a triangle type thing. The one thing that I know a lot of people have Microsoft's stock, but look at the range on a Microsoft stock. It's about $1.79 per week. Well, what does that equate to? That equates to actually on a $40 stock about a 4% move on a weekly basis. So that's not that bad. But as we can see, even on a this envelope that I have up here is 10% from the 20-day moving average. Typically, Microsoft does not, roll with that large of moves per week. But if you own the stock and you're doing things like selling, Microsoft is long since stopped being a growth stock, but it does have nice patterns. And so what I'm looking at with Microsoft is we're getting a bounce here off the 100 with the 0 line on the TSI. The momentum is staying positive, but it's not huge momentum like drove it up over here. And so it may just meander around over here. If it pops up the top, we may be looking at moving to 50, around 50. And so again, I would focus on levels of support and resistance at this particular time with all stocks with this in the current market environment. Starbucks was selling off earlier, but it looks like it finally bounced off the 50-day moving average. It's had a significant sell-off, probably one of the most strongest sell-offs since we had the sell-off back here early in March, where it came down almost to the 50 again and did a nice little rebound. We've again now bounced back off the 50, and it's trying to regain and move back up to here. Sandra, this is one of those. Yeah, Sandra, this is one of those that Mike and I talk about a lot. Is you've had a move up, now you had a pullback. Now, what's going to happen with this move back up? If it fails to make a new high and reverses down off of that, then that is going to mark it to go into an intermediate term or a short-term downtrend, because that's a classic failure pattern. And we saw with this big sell-off here, that prices came down to the 8-day moving average, rebounded off of that, but this 59.30-ish level, it could not get back above that. And this was, when did it have earnings? Okay, that was earnings. So we had a big gap with earnings and a big sell-off. And that is always something I kind of at least put in the back of my mind with a particular stock, that could be an issue. And sure enough, several days later, it gets back up and retested again, and then falls. Now we're retesting the 50, and we'll see if this hammers the 50. see what it does moving back up, and if it stays weak moving back up, and get a reversal and drop from there. We shall see. So did I address your question, Sandra? Did that? If bought at 450. Okay, cool. Like if you're long this stock and you were long from it down here, if it pulls back up to like, puts in a lower low or lower high, excuse me, then I would look at saying, hey, that's time to be taking, at least some profit off the table, if not all profit off the table, because that's an indication that, hey, we're going lower. Let me take a look at the time here. Okay, we're good. I can do a couple more. Okay, Netflix. Netflix was holding up fairly well at the beginning of the week with a huge market sell-off. It did not sell off. It got back here to the 8-day moving average and did a little bit of a rebound. It is, the true strength indicator is up here at a high and making a little bit of a negative divergence. Same thing over here. We had this high here. Here's a perfect example of a negative divergence across there. And so as you can see, we made this high, went on and made this high, but the momentum wasn't as great to make this high as it was making this one. So we're getting some excuse me, some consolidation. If it gains strength with the market, then it may just continue going. I like Netflix. It provides some, and it's definitely in a really strong uptrend compared to the rest of the market. And it may do a little bit more of a reset back there and test off the 20. Excuse me just a second. So we shall see. Okay, we covered LCI. FLTX. FLTX right now, we're going to just treat it like it's in a pullback, in a nice little uptrend. We may get a retest back here down to a 49.24ish level or approximately 49.50 level, which it's in the process of doing. Looks like it wants to turn over a little bit. We do have some negative divergence on the weekly chart on the TSI, and the momentum has reached a peak here. And so it looks like it may be wanting to do some consolidation here before it bounces higher. But I would be looking at this somewhere between, the 49.50ish level all the way down here to the breakout level of about approximately 48 or $49. See what it does around there for a potential entry for a bounce. But it's nice uptrend. Hold on, Co-Winter. I'll answer that question here shortly. Okay, Mobley. Mobley has been also holding up fairly well. Let's, it has put in a nice little flag, and let's see if it's almost broken above it, and it is above the 8-day moving average. So, one could, say, well, I've got lower reversal. Looks like the momentum's, the true strength indicator is coming back into it. I've got the momentum here moving back in. If my volume picks up, that's the big question here. What's going to happen with your volume? Right now, the volume on is still low. But if we get a breakout above this and it holds, you can use the 8-day moving average as your stop. and you got to move back up, and you would expect at least a move back up to the 62 to maybe 62.75 level, and if it breaks out from there, away you go. And Gino indicated I haven't. That must have been just added to either this morning or yesterday evening. Gino indicated that Mobley has been added to the leaderboard. Thank you. Okay, FleetX we did. Oh, no, just a moment ago. Okay, thank you. So let's see, Mobley, Baba. If you're going to be trading Chinese stocks, please trade them very quickly. I mean, they can provide some really nice, fast runs, but they can also then, fall apart very well. Right now, Baba is in a downtrend. It is bouncing off of a low and off of this trend channel that's going on here. So where's it going to rebound to? Is it going to rebound to back to the 8? Is it going to rebound back to this level here at about $77 before turning back over? We're just going to have to see. It had earnings, not a huge move with earnings. But I think, Baba is one of the stocks we need to be keeping a look at with the Chinese stocks. YY is another stock to keep an eye on. Oh gosh, YY, Baba, Baidu, some of the higher quality Chinese stocks, because once the Chinese government gets done doing what they're doing, it's those better quality Chinese stocks that are going to probably outperform their counterparts there in the Chinese of the Chinese stocks. So this one, yeah, one of the things you can look at this particular like Baba is that shakeout plus 3 type of move. You can either take this low here at 76.20 or this one here at 77.72. And if we do break, you could lay in a, here's a little trick you can do. You can lay in a basically a horizontal trend line there, and if it busts up above that, that could be a buy signal, but if it falls back below it, that's your sell signal. And so there is some there can be some proneness to whipsaw, or just wait till if the 8-day comes down, and let's say the price action keeps going like that, and the 8-day comes down here and starts to flatten out a little bit, and we're getting these nice little movements here of the price action. It pops back above that. Then and also the 20-day comes down here, and it really works well if you get a cross of the two, and that might be an indication of when Baba is going to be returning, moving back into an uptrend. But those are some of the patterns I'm going to be talking about on Wednesday night. So, okay, I've got time for one more, and then we're going to answer. Paycom. Paycom is held up very well after it rebounded from earnings, but where is it holding up well at? Right at a level of resistance from the past highs. Resistance zone, let's say between about 39.17 and 38, and it's not pushing that much higher above that. What we may see with Paycom is either a continued lateral consolidation where it bounces back and forth between right down here at 30 and 39, but that's a nice little $8 to $10 move, so you need to be aware of that. And so at this particular point, it wouldn't be a buy if it breaks out above the 39.17, 39.20 level, or even the 39.81. That would be a potential buy to move higher. The one thing of concern is while the the volume has been average to slightly above average. There hasn't been a huge amount of buying except for that particular day right there, right after earnings. So Gary, can you let me know what level I need to look for a reversal? On what particular stock or entity, Gary? And then Co-Wonder asked a question on the toss charts. How do you get them to maintain the freeze on the zoom? And basically, it is up here. You go to this little wrench thing here, and that'll pop up. And then you go to, is it price action? Our appearances. No, time frame. There we go. This little mark right here and you just basically say keep zoom, and we'll maintain that zoom. Okay, and you can set that up on all your charts, because I kind of like to keep mine, the proper zoom. If that's not checked, it will go back to your default, so it may try to show all the data for whatever time frame that you have allocated. Sandra, I don't use ATR. The average true range. Yeah, I don't use the average true range on my. I use the TSI, which I use 8 days, 883, and I use momentum, which is a 12 period, with open, high, low, close divided by 4. One last, Gary, this is our last question of the day. You had asked a question about AGRX, and you ask, oh, that's interesting. That's a nice drop. So you asked the question, can you let me know what level I need to look at for a reversal? Well, at this particular point in time, I would be looking down here at, I would go here and basically start saying, okay, where did it reverse before? There's one spot right there. Now, is there, yeah, which corresponds with that breakout level. And so that's one. Did it have any rest going up? Not a lot, but that is a very specific level. Another thing you can do is, as we saw with the Fibonacci retracements, we can basically retrace this from here to here. And isn't that interesting? So that's from this low to this high, and say we've dropped this, and so somewhere in this range here would be at least a Fibonacci retracement, and also based on some solid support level. So, okay, folks, I'm going to call it a day. Thanks so much for your questions, and please, in the future, if you would like, if you could just share your invitations, I would love to have more folks on the webinar. And have a great weekend, and I'll talk to you over the, I'll be basically sending out the traders report over the weekend. So have a great weekend, and God bless everybody. Bye-bye.